Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Well, good day, all. Ira Epstein of Linn & Associates with your metals market update. And this is for Wednesday. I almost said Thursday, but it is Wednesday, September 5th, 2018, just getting on to 3 p.m. Central Daylight Time. Well, we're getting a nice move in the upside in gold. It's not big. It's $350 or $3.50 on a full-size contract. The silver's up about 5 cents. Even lowly copper's getting a bounce. As the stock market, well, it's down. The Dow is the one up. The other indices are down. And as you know, they've got hearings going on in Congress as they're talking to Twitter and they're talking to Facebook and they're getting answers from what's going on with the CEOs with the company. What is Congress trying to do? Rein in control. That's exactly what they're trying to do. We'll see how it all goes. But right now, I don't know, it seems like just noisy market, not one that is trending today so much. You can also see the energies took a hit. Now, when we go to the gold market, overall, on a weekly chart, you've got this range where you went from 1353 to 61.5, and now you're trading approximately 1197.60 in the lead contract. The contract that most people will trade won't be the lead one, it'll be the December gold. And the Dece Gold, if we take a look, it's been working itself back down with a pattern of lower highs, lower lows, which is bearish unless the market takes out 1214.90. The bears have control of this market. The battleground has been against the 18-day average of closes. If you look at how many days you've been probing both sides, you can see that. And the slope of that is down, which keeps the market on the defensive. In terms of the algorithm called Bollinger Bands, which are these black dashed lines, well, what we have on those lines is pretty simple. What we have on them is a market that keeps falling with the resistance point, and that's what the top band is, trying to get closer to this 1214.90 level. In terms of market momentum, the market has had a downward slope, and you can see both numbers are finally back under 70. So the market is no longer in oversold, or rather overbought condition. Any number over 70 is overbought. So the market's got downward momentum. It's worked out of being overbought. It seems to be stuck at the 18-day average of closes. I would give the market more of a reading of bearish than bullish, but just for the point, I'd say neutral here. Take out 1195, and I think the bears will try to probe and see if they can drive to the lower band. I'm going to repeat again. What I don't want to see taken out if the market is really trying to build a base here to work higher is 1189.50. That's an important number for me. In the popular ETF GLD, the market has got that number over the 18-day average. So at least on this one I can say lower highs, lower lows, but because we're at 3 o'clock, the settlement's likely to be over the 18-day average of closes, which negates the trend down. When I look at a trend, I look to see what the swing line is doing. I filter the swing line with the 18-day average of closes. Because the market settled over it, I think that the bears don't have control of the market just here. I think they would regain it at a break under 1261, looking for the possibility of 111.15. In order to negate the downtrend completely, you got to take out 114.06. In the ETF GDX, which is the gold miners, this just keeps dropping away. It is an oversold territory, admittedly. It is a new low for the break, and support could come in at the lower Bollinger Band of 1759. The gold-silver ratio is not signaling that the metal markets have bottomed. All it did is stall out very close to the most recent highs that it's done. Silver today is trying to close over the lower Bollinger Band. Remember, 95% of the time, the market will stay within these bands. It is an oversold market. I'm not convinced it's attracting new short sales because you've got a pattern of a higher high and a lower low, and it's oversold. But there's nothing bullish about the chart. In the copper market, it's a bounce, a dead cat bounce, I'd like to call it, off the lower Bollinger Band, just like silver. These, let's call them industrial metals, are not getting a pretty look to them at all. Starting tomorrow, actually the 5th, the 6th, tonight when midnight rolls around, if the president wants to put on tariffs on China, he's got the green light. So we could wake up to that, and you don't know what copper would do if that would happen, but I would assume that a certain degree of the tariffs are built in. But markets have a funny way. They hear a piece of news, they get scared, and away you go again. I'll stay with what I said earlier. There's nothing bullish on the chart. In the platinum, you've got lower highs, lower lows. Resistance at 795.60. You'd have to take out 803.70 to break the downtrend. Barring that, I'm expecting sellers to show up at that 795 level. The strongest of the metals has been and continues to be the palladium, with what we call the embedded slow stochastic reading, where a market converts from overbought and locks in instead an uptrend. And that's what this market has done. It has stalled recently, with yesterday being a small down day, today being a small down day. Okay, but you're still staying up near the highs, and you're still respecting support at the 100-day average so far. Last in the dollar index, the market yesterday rallied to the 18-day average, slipped back just a tad today, playing games against there. I do not see a trend. What I have here is the swing line up, but because prices are under the 18-day average, there's no trend, and momentum is correcting an oversold condition by rallying. That's where I'm seeing it. I want to remind you about our research at Linn. And one of the things we do that I think you're not going to find from a lot of firms is we write about the commodity markets in a very specific manner, telling you what we're telling commercials, what we're telling hedgers, what we're telling end users, and what we're telling speculators. And it's a mixture of using futures and using options on futures. And it's a commodity report written for futures traders. Think about that. We write on all these categories, and no, you don't have to bury your inbox of your email with it, because everything comes to your inbox. You pick the categories you'd want. You can even go within the categories and pick subcategories. But you'll get to see what we send to our clients. We give you a limited trial if you'd like to see it. And there's one of the reasons to be a trader through us. Research, which you don't get a lot of. And now you're not going to find our information on the internet. That is not going to happen. How do you get this? You can give us a call. You can go to our website and sign up for it. You see our carousel of free offers when you go to the website. Or you can also click right up here, and that'll take you to our website, and away you go by signing up. I'm Ira Epstein. Good talking to you. See you all tomorrow.